Hey everyone, welcome back to Corporate Decoder, the place where we try to find the hidden secrets in corporate filings, and this time we are diving into Pismo Coast Village Incorporated's latest report. Now, Pismo Coast Village Incorporated operates an RV resort. Think of it as a campground, but for those fancy recreational vehicles. They make money from renting out spots for these RVs, RV storage, towing, and even a little general store. Let's jump straight into the numbers. On the 31st of December of 2025, the company had about $1.4 million in cash. That sounds okay, but they also had over $11 million set aside for capital improvements and maintenance. That is a lot of money for a company this size. Total assets were around $30 million. On the other side of the balance sheet, their liabilities, they owed about $289,000 in accounts payable and other accrued costs. This is normal business stuff, but what is interesting is customer deposits. They had over $2.6 million from people who've paid in advance for spots at the resort. That is a big chunk of what they owe. Now for the owners, the stockholders, they have common stock, and there are 1,774 shares out there. The value attributed to this common stock and retained earnings adds up to about $26 million. So the owner's stake in the company is pretty solid. Looking at how they did financially over a 3-month period ending in December 2025, they brought in revenue of around $2.3 million. That sounds good, but when you subtract all their costs and expenses, which were about $2.39 million, they actually had a loss from operations of nearly $78,000. So even though they made money from customers, their spending was a little bit higher. They ended up with a small profit before taxes of about $13,000 in late 2025. Interestingly, in late 2024, they had a loss before taxes of $59,000. So they are moving in the right direction from a loss to a small gain. This shows they had a net income of $9,000 in late 2025 compared to a net loss of $55,000 in late 2024. That is a positive swing. They also report something called other comprehensive income or loss. In this case, it's a loss of $6,000 in late 2024, meaning some investments or other items outside of regular operations lost a bit of value. In late 2025, this item was zero, which is good. When we look at the changes in the owner's equity, it reflects that small profit in late 2025. They had a net income of $9,000, which increased their retained earnings. In late 2024, they had a net loss of $55,000, and that other comprehensive loss that reduced their overall equity. It seems they are getting back on track. The cash flow statement is where we see how actual cash moved in and out. For the 3 months ending December 2025, they used $153,000 in cash from their regular business activities. This is down from the $183,000 cash provided by operations in the same period of 2024. So, they are spending more cash than they are bringing in from operations right now. Their investing activities show they spent $69,000 on capital expenditures in late 2025, which means buying new equipment or making improvements. In late 2024, they actually received over $1 million from selling investments. That's a big difference in how they use cash. Financing activities show them paying off some leases. They paid $31,000 in late 2025 and $87,000 in late 2024 for these lease payments. All of this means their overall cash balance decreased by $253,000 in late 2025, bringing their total cash to just over $13 million. In late 2024, their cash actually increased by over $1 million. Digging into the notes, we learn more about the business itself. Pismo Coast Village Incorporated is indeed an RV resort. They emphasize that they operate in one segment, the RV resort business. They also mention they are a smaller reporting company, which means they have some reporting flexibility. The business is very seasonal. They clearly state that the summer months ending in September are their busiest. Looking at the revenue for the 3 months ending December 2025, it was $2.3 million, which is higher than the $2.05 million from the same period in 2024. This is expected as the winter months are typically slower. They even provide a table showing how revenue and paid occupancy fluctuate throughout the year, with the September quarter being the highest and the June quarter also strong. Let's look at where the money comes from. In late 2025, about 68% of their revenue, or $1.58 million, came from RV camping site rentals. This is up from 65% of revenue, or $1.34 million. In late 2024, this shows they are relying more on site rentals. RV storage and towing made up 22% of their income, about $498,000 in late 2025. Retail store sales were down a bit, making up only 6% of revenue. Property lease income was also down, representing just 2% of revenue. They have to pay tourism taxes, and they owe $59,000 in late 2025 related to these taxes. This is a sign of their operating within a tourist-heavy area. They talk about managing their cash to stay within FDIC insurance limits. They seem to have a good handle on this by using different banking strategies. Jumping back to the assets, their property and equipment are valued at over $16.5 million. This includes land, buildings, and other equipment. They had $11.6 million just in land. It looks like they recently added some transportation equipment, which makes sense if they are doing towing services. They have about $606,000 in long-term finance lease obligations. This means they still owe money for equipment they financed. They have a line of credit for $500,000 that wasn't being used as of the report date. This is good to have as a safety net. The company has both finance and operating leases, mainly for transportation equipment and land. They have future minimum payments of over $965,000 for finance leases and $19,000 for an operating lease. This is a commitment they need to manage. Interestingly, they also lease out some of their property, like a building and cell tower space. They expect to collect over $1 million in lease income in the coming years. This is a nice, steady stream of income. The shares of common stock come with a perk. Shareholders get up to 45 days of free camping per year. However, there is a catch if the company doesn't make enough money. They might have to start charging shareholders for these services. That is a pretty unique arrangement. They offer a 401 profit sharing plan for their employees, with the company contributing about $18,000 per quarter. This is a standard benefit. Now let's get into what management says about their performance. They acknowledge that their business depends on recreational vehicle camping, and that summer is their peak season. They mention that the RV industry is strong, with more households camping than ever before. They highlight that camping site revenues increased significantly, mainly because they raised prices by $20 per night. This is a smart move to boost income. However, they also mentioned that occupancy was a bit lower in late 2025 compared to 2024, partly due to site maintenance. RV storage and towing fees also went up, and they say their storage lots are at full capacity. Plus, they are planning to build a new storage facility. This suggests storage is a growing and profitable part of their business. Their operating expenses did go up, especially for wages and professional fees. They also saw an increase in depreciation, likely from new tow vehicles. The net result is that while revenue went up, their costs increased slightly faster, leading to that small operating loss in late 2025. The report shows paid occupancy was 67% in late 2025, slightly down from 68% in late 2024. While not a huge drop, it means they weren't quite as full. Finally, let's touch on their internal controls. They admit to a material weakness because they don't have enough qualified internal people to handle financial reporting controls. They are trying to fix this by hiring a new accounting manager and using a consultant, but they say it is not fully fixed yet. This is something to keep an eye on, as strong internal controls are important for accurate financial reporting. So what is the bottom line here with Pismo Coast Village Incorporated? On the positive side, they are in a growing industry with strong demand for RV parks and storage. They successfully increased their rental prices, which boosted revenue. Their unique shareholder program is interesting. Although it could become a cost if profits don't keep up, the business is clearly seasonal, and they are managing that. However, there are some weaknesses. They had a slight operating loss in the latest quarter, and their expenses seem to be growing faster than revenue in some areas. The material weakness in their internal controls is also a concern, suggesting potential risks in how they manage financial reporting. They are planning big capital expenditures, especially for a new storage facility, which will require careful financial management. Overall, Pismo Coast Village seems to be navigating a competitive landscape with some success by increasing prices and expanding services like storage. But they'll need to watch their costs closely and shore up their internal financial controls to ensure long-term stability and growth. That is our take on Pismo Coast Village's latest filing. What do you think of their strategy and financial situation? Let us know in the comments below. If you found this breakdown helpful, give this video a like and subscribe for more corporate insights. And don't forget to join our Discord community, linked in the description, for more discussions. Thanks for watching. See you next time.